to the HX HealthiosXchange webinar series, How Do I Invest in Emerging Growth Companies on HX. HealthiosXchange is the premier investment marketplace dedicated exclusively to the global healthcare industry, employing crowdfunding as the cornerstone of a new funding paradigm. HealthiosXchange offers direct access to the broadest opportunities on a fee-free, carry-free basis in the most trusted online environment. You'll be placed in listening mode. If you have questions, please submit them by entering them into the chat box. I'll be answering questions throughout the presentation when they come up, and we'll have a brief Q&A session at the end of the webinar. We are recording the presentation, and we'll send it to you following the webinar. Our agenda for today will be the following. We're going to just talk a little bit about the mission statement. If you've attended a previous webinar, you're going to see a few similar slides, but it's important for new members to see the mission of HealthiosXchange. What is HealthiosXchange? Identifying companies on HX, due diligence, performing due diligence with company pages, performing due diligence with research, performing due diligence with community-based aspects of the portal, best practices of accredited investors overall. We're going to talk a little bit about the reserve system, which is the way that accredited investors fund companies through the portal, and then some contact information. So the mission statement. So here's the mission statement: expand access to capital by attracting new investors to healthcare, enhance liquidity by deploying exclusive scoring tools, which were launched in the first quarter of 2013, heighten returns for investors by offering deals on a no-fee, no-carry basis, which is very important. Ability to direct invest in more than 5,000 companies on the portal. Seed exit platform, no companies left behind. On average, a successful company raises $49 million over 5.7 years. We don't feel that crowdfunding alone will be able to come up with that kind of money, so we have all the other constituents in the portal active and participating. Investor protections is a key area. Aside from the IP protections, we have no adverse deal selection, meaning everyone's welcome, total transparency, and low investment thresholds, so investors can diversify. It empowers users to build community within the healthcare ecosystem. We have a lot of LinkedIn functionality like friending, messaging, sharing with other members, and then following companies and getting Catalyst updates. The origins of this was basically the reason why Healthios, the parent company, launched this portal was because of some of the recommendations from the Kaufman study that basically said that the 2 and 20 model overall doesn't work very well. It works very well for the top decile firms, but not so much overall in the space. The other thing is that the distributions of capital amongst companies outside of Boston, San Francisco, San Diego, it's a rough road. So crowdfunding, could be a good, viable avenue to raise money for those companies. But there were 5 recommendations. You'll see them on the right-hand side here. And then, of course, if you take a look at the crimson on the left, we matched our portals, which are in the middle there, to the recommendations from the Kaufman study. And basically, the Kaufman study was the most important thing that the Kaufman study said was they had upwards of 100 VC investments. And it's basically at the bottom there, the cumulative effect of fees and carry did not enable us to achieve returns sufficient to reward us for patient expensive long-term investing. So the 2 and 20 can be very prohibitive for investor returns. I think of their 100 funds, I think 12 gave them a 2 times or greater return, and 50 or so or more returned their capital after fees. So what is HealthiosXchange? Just real quick, for those who haven't done another webinar, what is the HealthiosXchange? It's a premier investment marketplace dedicated exclusively to healthcare. It employs crowdfunding, which is the definition of the small amount of money raised from a large group of people. Comprises 4 discrete capital markets. You have HX Crowdfinance, which is non-venture-backed companies. You have Foundation Place, which is venture philanthropy and foundation-backed companies. Express, which is fee-free, carry-free investments alongside top-tier institutional investors. This would be funding like sidecars for venture-backed deals. And then in-market is the public portal, ATMs, direct investments, registered directs, I think pipes. So that's in-market. So this slide right here just shows there's quite a few people in this portal. The entire ecosystem is represented from accredited investors, emerging growth companies, investment professionals, and strategic buyers. So we have everybody in the portal because we feel like we need the attention. So the portal, even though the portal's basis, its foundation, is essentially raising money from wealthy people, we also have a big partnering component in here. And there's a big community-based function here. So there's a reason for the venture capitalists. There's a reason for the strategics. There's reasons for the family offices to come through the portal, even if they're not going to fund companies. It's a great place to source deal flow and for you to communicate and friend these individuals. So it has a lot of this LinkedIn for healthcare type theme to it. There's 3 different pillars. You have open access. We talked about that before. No adverse selection. Everyone's welcome, kind of like AngelList. There was a scoring system that will help you with your due diligence, which we are launching in the first quarter of 2013. And it's fee-free, carry-free, meaning we don't take a 2% management fee or retainer, and we're not taking carry on the back end. The way we're paid, by the way, is 5% success fee on capital that's raised via the portal itself. No adverse selection. Once again, 5,000 companies. Everyone gets a company page, which I'll show you in a second, and they're organized by ecosystem. There's 46 market sectors, and companies can create watch lists and follow your company. No orphans, meaning our goal is 100,000 investors. Obviously, we're not there yet. We launched on August 2nd, by the way, with 1,200 members. Of those 1,200 members, I would say 20-25% are accredited investors. So we have a ways to go, but we have some strategies in place to scale up to 100,000, we think, very quickly. Also, some really interesting software inside the portal for inbound marketing and linking investors and companies. Information flow-wise, as far as capital flows, we think research is a big deal, and most investors do as well, especially our accredited investors. They're trying to make viable decisions. We lower the investment thresholds to make it easier for them, given the fact that the odds of approval are 30 to 1 in biotech. So why put 100 grand into one company when you can put 5 grand into 20 companies? And so research is key from a scoring perspective, and also the market itself is a big deal. So we have capital flows, so you can see the level of activity in IPOs, M&A activity. You can take a look at funding rounds, amount of money that's raised, and how liquid or illiquid the sector is. This is what a company page looks like. You'll see, starting from the upper right-hand side, you've got scoring, which we'll talk a little bit more later in the presentation. You've got fundraising targets. You have that Invest Now button, which that red button is the reserve system, by the way. So if you're wondering, later on with this reserve system, that's where it starts when an investor clicks that red button. You have deal points, which talks about types of securities, minimum, maximum raise, minimum investment per investor, pre-money valuation, use of proceeds. By the way, this is both a company page and a deal page, and the only people that are going to be able to see this are essentially accredited investors. We don't allow non-accredited investors to see deal terms. If you swing around, you've got a company description, you've got highlights, Q&A, public documents, videos, all kinds of stuff. It's a very distinct page, and essentially one of the keys is in the lower right-hand corner, the followers, getting followers to your page so they can receive catalyst updates. The more page views, the more activity on your page. That does oftentimes correlate to interest, and you'll be placed into our directory under most viewed companies, which will also go out in newsletters, and it will go out in trending reports. We also have offline meets online. So we have partnering conferences, think bio partnering, and we've done a really nice job here. Partnering is a key aspect of this capital continuum, and we would highly encourage our emerging growth companies to participate in these conferences, which are held alongside of major scientific conferences like TCT and ASCO. Okay, so let's just jump into identifying companies on HX. So one of the key areas for investors is how do I identify companies on this portal that I might be interested in? And we'll go through just a few slides here. First of all, the directory. There's 5,000 companies in 46 market sectors. A certain amount of the companies are curated, a certain amount are not. Meaning that we set up these company pages like LinkedIn. The companies come in, appoint an administrator, and they build out their company page. And what we do then is we put them in the second bullet point into tabs. So featured, we're still trying to figure out exactly what we're going to put into featured, but there will be a distinction for featured companies, new companies that have started to fund, most viewed companies, which is based on their page view activity, which is we encourage companies to add their investors, their colleagues, team members, etc., to the page. Most viewed, and then you also have foundation sponsors. So for those that have, more than I guess profit motive, they actually want social good. This venture philanthropy is a big deal right now. So we have tab for that. We take it to the Match.com. The reason why I say that is this tagging of metadata. So basically, we encourage investors to complete their profiles with their suitability and their preferences. The suitability is essentially the block and tackle of investing, which is, what's my sectors, what are my objectives, do I need income, am I looking for capital appreciation, what investments do I have, what are my liquidity needs, and then on the investor preferences side, what market sector do I want to invest in, what investment stage, and what financing stage. And by the way, there's venture capitalists in this portal as well, and are accredited investors who do deals within or outside their firms, and it's very advantageous. So if we have that information, and data is king, then you can match the companies with the investors. You see you have your companies on the left-hand side, you got your investors on the right-hand side, and you're trying to do this Match.com type exercise where the companies are saying, hey guys, we're funding now, we filled out our, our portal, our company page, we have all this information, and the investors are like, okay, we're in oncology, and the company's like, okay, we have a lead program in oncology. Well, the key thing is with accredited investors, the reason why it's so inefficient is that you may not ever meet that investor on a country club or get referred by a friend. So we link both parties, and so we match them by, once again, if we go back, market sector, investment stage, and financing stage. So that's the goal of the portal, is to basically do this Match.com exercise with investors and companies. So let's get into due diligence. There's 3-4 ways you can do due diligence. One of the biggest thing angel groups, when they counter crowdfunding, is they say, wait a minute, there's no due diligence. How are they going to, come to a decision? Everybody meeting in groups and contributing with various backgrounds, et cetera. The crowdfunding can do similar type of things as angel groups, but they do it obviously leveraging technology. There's 3 or 4 ways. One of the ways is this company page that I showed you earlier. And on that company page, you'll have non-confidential documents. The confidential documents will be held behind a firewall. You have to sign a CDA. We'll have videos. We'll have a Q&A forum. If someone leaves a message for you, you'll get an email saying somebody has asked you a question. So it's a really nice way to communicate. Accredited investors, they will see deal terms, the type of security, minimum, maximum, minimum investment per investor, and use of proceeds like we saw before. So the first way that people do their due diligence is by going to the company pages. The second way they do due diligence is through the research, which we also touched on before. So we're building out a scoring platform, which is very unique. So the scoring platform, and I won't go through all the bells and whistles, but essentially it's a quantitative approach to assessing the projected success of a company, either from an IPO, an exit, or a partnering event. And we look at 2,000 companies. We do a whole bunch of stuff with the data. We look at, variables that correlate, in this case 104 of them, and we match you against those variables and see where you come up. And so we stack rank these. So the top quartile will be able to fund, and if you're not in the top quartile, you can get sponsored to raise money as well. So you'll see a whole bunch of stuff here. But this is not launching until the first quarter of 2013. But it's a guidepost for our investors to say, hey, I'm interested in oncology. What are the best oncology companies that the portal, what's the best, companies per se. And we're never going to get it right. It's just a guidepost. Trying to get the right 25 companies. We'll never get the right 25 companies, but we hope to get the majority of them right. So we don't lose, money for our clients. We also have capital flows. This is really difficult to see, but I encourage you to go to the portal. Basically, it talks about market sectors, due diligence. This is that capital flows analysis. If it was bigger, I just took a snapshot of it. If you take a look at the top of the page here are the major strategics up in that top section. It shows you how strong their currency is, their stock price, and then some other information on the bottom about the venture capital and the M&A activity in the sector as well. So research is the second way. We provide, by the way, for free for our investors. Okay? So let's go to the next, community. This is the third way that people do due diligence on the platform. So essentially, we encourage everyone to network, right? So there's a friending where you can send messages back and forth. There's a following of companies where you can get catalyst updates. There's an inviting and a sharing type methodology here, or functionality where you can invite and share information. You can participate on the bottom on Healthios events, and you can even host depending on your interest level and your activity on the portal. So you can also host these. We also have one-on-ones and roadshows with strategics across the country, putting you together, introducing you to some of the leading strategics in your space. So from a best practices perspective and from accredited investors, just in summary, what would be best practices for investors? And essentially, this is what you have. So one is obviously, just in summary, you want to complete your investor profile so that we can match you and people can find you. That's the whole reason for the portal. You want to follow companies and build community, right? Other companies, and have other people, investors, follow you. So it's important to bring your network in. Activity-wise, to maintain your activity levels, join events, review research, participate in Q&A discussions, subscribe to our newsletter, for example, where we feature members and we feature webinars and research and whatnot. Invite colleagues to join HX. And then lastly, in another webinar coming up, we're going to talk about this managers program, which is micro VCs. AngelList is doing a wonderful job with this micro VC, by the way, which is they aggregate investors into SPVs, special purpose vehicles, which are like LLCs. And essentially what they're doing is they have a lead syndicator. So in an SPV, I think it's 3C1, you can have 95 or less investors into an SPV. That counts as one investor. But essentially you have, of those 95, you have lead syndicators that raise money from their network, which is like member investors of the syndicate. And it's a way to scale and also protect yourself down the road, because other capital sources are not too excited about fractured cap structures. So the managers program, the micro VCs, and AngelList, like I said, is doing an extraordinary job with this platform as a way to scale investing with accredited investors, and we'll be launching that here in the next month or two. The reserve platform. Let's just talk about this. What does this stand for? This is basically the way that people fundraise through the site. The first thing you have to keep in mind that one of the key things of crowdfunding is low dollar thresholds, right? The problem with angels is that there's problems geographically, because if you don't live in Boston, San Diego, and San Francisco, oftentimes you're not even a member. Number two, they have high investment thresholds, like $25,000 and above, and who wants that when this is a tough investment? It's not like real estate or energy where there's a yield and you can liquidate an asset to get some of your money back. If a company fails, it fails, right? So low investment thresholds is key to diversification. You have e-compliance, so you have standardized and automated processes for documents and reporting with Reg A, Reg D 506D, which is the old Reg D, the 506C, which is journal solicitation, and then you've got the ability to verify people are accredited, to be compliant, the suitability, because you certainly don't want to have people invest if they're not suitable for it. On the e-legal side, the e-signature is a big deal for everyone to be able to view the documents electronically, to be able to sign them electronically, and then the next point is to send the money into escrow. So you send the money into escrow, the money held in an independent escrow account, and once the minimum investment threshold is met, the money is wired. There's a typo there. Money is wired to the company minus 5%, and then there's e-tracking, so you can obviously track your investments. So that concludes our presentation. If you have any questions, let me know. I've got a few come in already, so let me go through those. But this is my contact information. This has just been a real quick intro to how investors can utilize the portal to find the next Onyx, Regeneron, Pharmacyclics, Alexion, for example. These companies that have extraordinary returns for their investors. So let's go through a few questions, by the way. We've got, first of all, how do I know when a company hits the minimum investment threshold? And that's obviously needed to fund the company. Otherwise, the the money is returned. So essentially, in this case, there's a thermometer that will be built into the deal page. So you'll see 70% to goal, 85% to goal, and then you'll know exactly when the minimum is reached. And then your money will be wired to the company. And we have a stock track system, which obviously is all of the block and tackling associated with your stock certificates and your tracking. What happens if the company minimum is not met? I think I just mentioned that the money is returned to the individuals themselves. And how does Healthios get paid? We touched on that. It's a 5% success fee that comes off of the funds that are directed from escrow. So this concludes our presentation. We really appreciate your time. If you have any questions or you'd like to talk to me in more detail about what we talked about here, please give me a call or email. Thanks again, and we look forward to your future participation. Thanks so much.